This is Bye Bye Money and welcome to my channel. Thanks for tuning in. There's a million things you could be doing right now, but you've decided to tune in this channel, so much appreciated. Thank you so much. And yeah, in today's video we'll be going over learning how to scalp using pure price action. And we scalp the E-mini on the 2000 tick chart, and E-mini, SPY futures, S&P 500 futures, whatever you want to call it. We're scalping the E-mini here, and we're using only price action. And the price action setup we like to use is the two-legged pullback. If you don't know what the two-legged pullback is, it's simply a setup that looks like this. First pullback, first entry, second pullback, second entry. So we like to look for this pattern here. It's just two pushes down, and then we like to look for the reversal right here. We like to enter, we call this a second entry. Also, this can go this way. We call it also an ABC pattern, and we like to enter into the second entry right here. And we see this pattern all over the charts all day, every day. For instance, we have a two-legged pullback right here, just on this chart. Two pushes down, and then on the reversal, we're able to scalp out right here. And this is a two-legged pullback off the 20 EMA. So that's an example of a two-legged pullback on the chart right now, what we see. If you'd like more information about the two-legged pullback, the details on the technical details on how to find it, how to count legs, we'll have links in the description below, so check those out, and they go over some of the basics on the two-legged pullback. Basically, we like to trade the two-legged pullback in good context, such as off the 20 EMA, support resistance levels, trend lines, channels, and things like that. And the reason why the two-legged pullback is so probable is because of market psychology, trader psychology. In fact, the two-legged pullback has been around since trading has begun. It is a simple outcome of buyers and sellers both in the market fighting, and we like to find this pattern because whenever the market makes two attempts at something, right, first entry, second entry, then typically the second attempt is successful. It's the same concept as double tops, double bottoms. So traders are more confident to enter, especially a group of traders or the masses are more confident to enter in the second entry, the second time, the second attempt down here. So one attempt to reverse, but the second attempt is typically probable depending on the context. And so in today's video, we'll be going over all of the setups for today, but in this video, we'll do things a little different than most chart reviews. We will lead up to the point of the setup, and then we will go through the analysis and see the outcome of the setup. Okay, get rid of this. It's currently getting in the way. Already in the chart, you see the 20 EMA, which is one of the indicators we have. We have two indicators, the 20 EMA and the SMA, the 240 SMA. Those are only two indicators we have. And also the two-legged pullback indicator, of course, that counts legs for you and helps you identify second entries and traps. So if you'd like more information about this indicator, you can check out the official website at www.twoleggedpullback.com. So on the chart, you see we have this dotted line and this dashed line. This red line is essentially the last trading day's close, and this is 9:30, basically at the regular trading hour open. I like to have that so you can just see when the day begins. And we'll be only taking trades after this blue line. Now for the first setup, we have a two-legged pullback here. A, B, C. This next candle will break above this current candle. Would you take this trade? Would you go long here? Would this be a good trade to go long in? If you were in this situation at this time, would you take this trade? This is what I would do. This is the context up to the point where how I would see it. To scroll back a little bit, though we're going to trade only after this blue line, does not mean that we will not chart before it. Context so far is we have this uptrend. This uptrend actually breaks down right here, and typically what happens after this uptrend is that we get a channel. This is called a spike in channel. This is something that Al Brooks has coined. Essentially what typically happens is there's a breakout, strong move upwards, and then there's a channel going the same direction as the breakout, but it's going up at a lesser degree. And so we have this spike and channel. And this channel, we can easily chart up to this point. We would have it. We would probably start it like this. And so whenever you make channels, what you do is you connect the pivot lows. For uptrends, you connect pivot lows that when connected, it does not intersect any other points. And so I'm just doing this for example. If we only had information up to this point, we would use this pivot low. And then you find a pivot high between the two pivot lows that when connecting a parallel line, it will not intersect any points between the two pivot lows. And so just say that you had it up to here for now, and as the chart continues to develop, you see that it breaks down here. It breaks down right here. As you can see that it breaks down here and then comes back up, and so we include this in the channel. This top pivot can stay the same because there's still no intersecting points between this pivot and this pivot. Comes down again, and then we update it again. And so we have this spike in channel that is starting to kind of lose its momentum. It's almost sideways, almost straight up a trading range, which is essentially what a channel is, right? A channel is a slanted trading range. And we are in this current spot right now. We're in this current spot right now. And so would you take this trade? Notice here that we have a two-legged pullback, but also notice this, which is very hard to spot if you did not have the indicator. This is actually also a failed second entry short. We have a two-legged pullback the other way, which is surprising, but we do. And on the second entry, it fails. It's failing to make a point. It fails to make a point because it does not make a scalper's profit going downwards. And so in this one single point at the bottom of this channel, we have a second entry long and also a failed second entry short setting up. Very easy to see that with the indicator because you have a dark green number in a magenta box. That means that this is both a second entry and also a trap. And so you have that going for you. Not only that, you have a micro double bottom right here. Not only that, you have a higher low. So you have many things going for you right here. So for me, would I take this trade? In this scenario, I think there's enough here to go long. And so let's see what happens. Boom. In one candle, we make our scalp, and it's an absolute scalp. I call it an absolute scalp when it makes 6 ticks because anyone who's scalping the scalper's profit will be absolutely had made their target. I call the, if it moves exactly 5 ticks, I call it a perfect scalp. And that actually means that, for instance, right here, there was a perfect scalp. And it's because this swing only went 5 ticks. And so that means there might be traders still trapped here. That's what the golden boxes are. So golden boxes are perfect scalps. And so in one bar, we were able to make our scalp. So it's a good scalp. In fact, it probably will hit up to here. Here we are at our second setup. We have a B, C pattern. And the first thing I notice is that we have a very good signal bar. Second thing I notice is that we are at a critical point, the 240 SMA, as you can see from this dashed line. So, would we go into this second entry long? Would you take this trade? If I was trading this live, I would really consider to take this trade. Just off those two things alone. Key entry point plus good signal bar with a two-legged pullback. But there are some things that we need to notice here. One thing is this. We have a trading range developing here. And this trading range has broken out. We see 1, 2, 3, 4. Whenever you have 3 overlapping bars, you start thinking trading range. 1, 2, 3, at least 3 overlapping bars, continues, and then it breaks out, fails to break out, and it comes back into the trading range, and now it's reversing to the other side. Not only that, you have this strong breakdown of this spike in channel. This channel finally breaks down with strong bear bars, and it tries to come up, and you're thinking retest. One particular thing that you should notice about this channel up is that it's not only a channel up, but it's also a trading range as well. You can tell it's a trading range because of how many times this bottom line is hit. You hit it 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 times. This is a trading range as well. So not only do you have this channel upwards, but you also have this trading range. And these are failed breakouts of the trading range, and they come back in. And so now you actually have come back to retest this trading range. With these things combined, you could think perhaps we are on a strong downtrend. So when you see this candle, good signal bar, you have a couple things going against you. Breakdown, retest, failed breakout of this trading range, and then we can continue the original trend, at least to a measured move of some sorts. You can have the measured move of this move, and simply we have not yet reached it. There's still more room to go down. Would you take this trade? I personally would be waiting for this setup right here. I would wait not for this two-legged pullback, which is what is showing here, but I would wait for this two-legged pullback, the second entry. So what that means is currently this is what this is showing, but I want a higher low. I want essentially another second entry, but I want the second entry to be a higher low than the first entry. So I personally would skip this trade because this downtrend is early and it could, who knows, it can go on forever. We don't know the strength of this downtrend yet. So I would wait for a higher low. Let's see if we get it. Oh yeah, another thing. This red line is also yesterday's close. And so we're actually right on it bouncing, and we're actually on 3 different supports here. Ooh, actually, well, 2 main supports, so 240 SMA and yesterday's close. I would be very tempted to go here. Let's just say that. I'll be very tempted to go long here. But I probably would skip it. Also, strong bear bar here. Kind of hard to tell. Strong bear bar, but the bears, there's some bull bars here, so it could show you some weakness of this downtrend. Definitely not as strong as this, right? When you see this, and you see this, you can tell the quality of this downtrend versus this downtrend. You can tell, like, when you see this, you're thinking probably another leg down. When you see this, you're like, who knows, right? We have a good mix of bear bars, bull bars. This is price action, right? This is reading the price action of what we're seeing right now. So let's see if we were able to make a scalp if we enter this trade. Excited? Let's see. Boom. In 1 bar, you're able to actually make your scalp. So some people took their scalp here. For me, I would be waiting for that higher low. Second entry higher low. Let's see if I get my second entry higher low. Okay, so we're still in the city to we're still in two-legged pullback city here. We still haven't lost it because this pivot high didn't break above this pivot high. So as you see here, we actually were able to get our higher low. Since we have our higher low here, would I consider to go long here? There is a higher low here, but notice that now we're back in this super small trading range. Failed breakout, and the 20 EMA is in the way now. Not only that, this trend line is also in the way. And so these things, all three things can cause some resistance here. And so I would skip this trade. Not enough room. If this happened lower right here and there was enough room to the top of this trading range to get a scalp, then I would consider it, but this is too high now. I can't consider this trade. Let's see if this makes a scalp anyways, but I would skip it. Okay, you're kind of sweating. You're like, okay, maybe, and boom, you're able to make your scalp. So you've been banking on a breakout right there, and typically I don't like to bank on the breakout, especially with the 20 EMA like that. So though that does make a scalp, that's a trade I would still have skipped. What would be some things that you would see automatically? If you saw this doji in this two-legged pullback right here, would you consider taking this trade? Let's look at the context. This trading range, if we were to keep going, we see again, we're testing this bottom of this trading range once again. Not only that, we are testing this pivot high. Not only that, we have broken down this trading range. And so what we're thinking is possible beginning of a downtrend. When the downtrend happens like this, what we look for are double tops. Here is the first reasonable place to look for a double top. Kind of a major swing high here. So this is what we're finding ourselves. Not only that, this trading range now will extend it, and you could argue to include some of this price action up here, since we do have some price action up here with these candles. So you could see failed breakout, still failed breakout, retesting failed breakdown here, and then, well, you could even consider now including these candles because it breaks out, comes back in. Very hard to make a trade off any of this stuff. You know, it's too choppy. Look at how choppy these bars are. Look how choppy these bars are. Very difficult to make a trade here. And so, you know, there's no setups, no real good setups here. We see this setup now, and now we're considering to go short here. Again, what would I be looking for here? I would look for this setup here. I would look for, instead of this two-legged pullback, which is what we have right here, I would look for a lower high. So it would look something like this. I'll look for a second entry that looks something like this. So essentially, I want a lower high here, because I am not yet convinced that we're in a trading range. I sense a double top, but I feel more confident if we had a lower high, and I'll feel way more confident if we had a lower high to enter here. So let's see what happens if you went short here. Okay, it comes down and makes another doji, and so you're thinking, okay, did I make a mistake? You start to question your life decisions now, and you're wondering, what are you doing in this trade? Should I skunk it? Should I get out? You know, one whole candle, 2,000 ticks passed, you still have a major scalp, and you're right back here, and you're just about one tick away from trapping yourself out. 2 ticks away to trap yourself out. Let's continue. Okay. You finally made your perfect scalp. You made a perfect scalp here. You're still in the trade, most likely, because it probably just touched it. It's coming back. What the price action is doing right now is actually testing the top of this trading range, and people have limit orders here. Tire candle goes. You're still in your position probably, and you're wondering, should I get out? I can move my stop loss 1 tick below my entry point now, save on commissions, and just skunk out of this trade. Perhaps I missed something like this trend line like this. You know, maybe we're on an uptrend now. Who knows what's happening here? You're banking on this double top, this to be a double top, and currently you're still okay, but your premise is still good, but you're still questioning it because you're in this trade for so long. Next candle, boom, breaks down back into the trading range. Downtrend, failed breakout. Remember on the trading range days, when there is a counter trend breakout, expect it to fail. Expect it to fail. So again, breakout, counter trend to this downtrend currently, and we are coming back down. The lower high setup that I was looking for, the second entry lower high setup I was looking for, is no longer viable because since this pivot low is below the previous pivot low, which is right here, the counts reset, and so we don't have a second entry anymore. So it's okay, we let that go. We have a two-legged pullback, A, B, C, and yeah, if this candle breaks previous candle's low, the next candle, would you enter short here on this two-legged pullback? I guess a little note on reading the indicator here, it could be helpful for us to know, is essentially whenever there's two pullbacks or more, the next reversal will be a second entry. As you can see here, this number 2 means there are two legs up, that this is the second leg up, and so the next reversal will be a second entry. And so whenever you see a number higher than 1, essentially 2 or greater, 2 here, the next one will be a second entry, next reversal. 3 here, next reversal will be a second entry. Whenever you see a number, the next reversal you'll see is a second entry. So we have a number 2 here, and so that means the next reversal will be a second entry. That's just a quick way to see it, but also the two-legged pullback indicator comes with a super signal and just tells you, with the super signal, if the next leg will be a second entry or not. But just to help you guys see the counting of the indicator, you can see here the counting of the legs: 1 leg down, 2 legs down, 3 legs down, 1 leg up. Again, 1 leg up because it counts reset because this pivot low is lower than this pivot low, and 2 legs up because this pivot low is higher than this pivot low. It only resets when the legs, when the pivot lows go below previous pivot lows, then the bull legs reset, and pivot highs go above previous pivot highs. The bear legs reset, as you can see here. 1 here and another 1 here. Resets because this pivot high is higher than this pivot high. Okay, just a quick review of that. And so we do see a 1 here and the 2 here, so the next reversal is a two-legged pullback. Would you go short here if you saw this setup? First thing you notice, bull bars. 1, 2, 3, 4, 5, 6, 7, 8, 9. 8 out of the last 9 bars were non-bear bars. I say non-bear bars because this is technically not a bull bar, but it's a non-bear bar. So 8 out of the last 9 are non-bear bars. That could seem very strong, but notice here, we have starting to break now underneath the 20 EMA. We have starting to break underneath the 240 SMA, which used to be support. We started to break under yesterday's close, which also was acting as support, but now we're seeing price action going underneath it. In fact, 2 legs underneath it, 3 legs underneath it. So we're seeing loss of momentum here. Not only that, if you go back here, we have still reason to believe we are on a downtrend. Essentially, this breaking above here and missing the trading range high is bearish in itself. Not only that, you have this trading range extended right here. And so with these trading ranges, failed breakout here, failed breakdown, failed breakout, failed breakdown, failed breakout. So we came back in, so this trading range is still viable. Failed breakdown to the other side. If I saw this live, I'll probably think we're just going down from here on out. Like this was the last straw. We're going to continue going down. Especially we come back up, hit the 20 EMA, and we're like, okay, I'm just thinking we're going short. What starts to change your premise is maybe one more test up to the high of this trading range. It's this super strong bull bar out of nowhere. Strong bull bar out of nowhere. I'm going to go ahead and get rid of this kind of in the way. The super strong bull bar, pullback, and more bull bars ending near their high. This makes me think either this is a failed breakdown, or at least we're going to try to test the top of this trading range one more time at least. So as you can see here, that's exactly where we are at. We're at the top of this trading range, as you can see here, but we have made a doji and we just hit it with the high. We did not close above it. The body is not close. It's not even close to it. Straight up, it touched it, poked it, and then came back down. So this, for some, could be considered okay. It's time to go short. We hit the top of the trading range once again. But again, I know this sounds repetitive. That's the beauty of price action trading. You repeat things, and good things should happen sooner or later. What I will be looking for here, since I do not know if this, notice here as well, we have a strong uptrend. We have not yet broken this uptrend. We're still on a strong uptrend here. To go short here, it would be risky, because who knows if this uptrend is done. This could just keep going up forever. So what I will be looking for is, I'll say it again here, a lower high. Typically on trading ranges, we want to trade those lower highs. We want to look for those lower highs. And so what we're looking for now is not this kind of two-legged pullback, but we're looking for this kind of two-legged pullback. You know, we're looking for this here, not this lower high two-legged pullback. So let's see what happens if you go short here on the second entry. Okay, it goes down. It doesn't make your scalp yet, but it's a solid bear bar, and you're like, man, I'm so good at trading. I am the best. There's nothing else for me to learn. But you still have this downtrend or uptrend to worry about. And you're thinking, easy scalp, easy money. Let's go. Boom. Now you see this. Now you're thinking, wow, what am I doing with my life? Why am I doing this? What's the point of trading? I've made another mistake here. You know, maybe I should just skunk this trade. But remember, what we're looking for is a lower high. So I will be interested once we go below this candle. So maybe not a lower high, but double top, which is good enough for me. When I see this, now I'm interested, because there's enough room to the bottom of this trading range. Good signal bar, excellent signal bar, and it's a double top, or maybe not a lower high, but still a double touch of this top of this trading range. This, when you see this, and if it breaks below this candle and it doesn't give you a point, this is one of those times you're just going to be awe and amazed that didn't scalp. This is one of those moments you're like, you got to take this trade. A lower high, basically another second entry here. And you can see this, so I'll enter here. Also, let's see where we are with our trend. We're just there, we're just about to break it. So that is a cause for concern, but with this setup right now, top of this trading range, this is one of those trades you got to take. Let's see what happens. It comes down and you see the 20 EMA starting to act as some support here, and you're questioning, did I make a mistake? And then finally comes down to test the bottom of this trading range. So that would be a good scalp. The second one is a good scalp. The first one was risky. We keep going, and now the breakdown pretty much commences from here. All right. For the next setup and last setup that we'll go over today, if you see this candle and the next candle breaks below it, would you go short here? We have a two-legged pullback, A, B, C, and on the next reversal will be a second entry. You saw this, would you go short here? Would you take this short? Let's go ahead and look at the context, and I'll tell you what I would do. First off, you see strong downtrend, very strong downtrend. It'll first look like this. Then you realize it pokes up above it, so you need to update it, pokes up, update it again. So here is our channel. We finally broke out of it, and now we're peaking above the 20 EMA. Typically what happens after strong downtrends or strong uptrends, after the first breakout, what typically happens is there is another two-legged pullback continuing the trend to retest the bottoms here, to retest the bottom of the, or to retest the lows here. And so what we're expecting here at this downtrend is a retest of these lows. Not only that, we have a two-legged pullback at the 20 EMA. This is my bread and butter. Some things that could cause some concern here, cause a concern. Bar any near its high, tried to pull back, basically is a mini pullback here, and comes back up and fails. So this wick here on a smaller time frame is actually a pullback, and it fails. It goes up. So you have some cause of concern. You have a very small signal bar here. If I were to go into this, I would have to keep my 4-point stop loss because of how small this risk is. Actually, you need to keep the risk at 4 points here. So kind of a big bear bar here, or big bull bar breaking out, and you have this kind of long tail here and a small signal bar. These are all cause for concerns to go short here. But for me, the main thing is strong downtrend, two-legged pullback, and I'm expecting a retest of the lows here. Would I take this trade? 9 out of 10 times I would take this trade. 9 out of 10 times, which is the probability we need to be profitable with this strategy. 90% probability. So 9 out of 10 times I would probably take this trade. Yeah, definitely concerned because of this 1, 2, 3, 4 bars are bull bars, but I mean, you gotta look to the left. Look how strong these downtrends are. Though we do have 4 bull bars in a row, that pretty much matches these 1, 2, 3, 4 bear bars right here. And so you're thinking most likely two-legged pullback to the 20 EMA retest. So I will go short here, keep my 4-point stop loss. So with a 4-point stop loss, this is what it looks like. But to go here, 1, 2, 3, 4. My stop loss will be up here. Let's see what happens. Okay, within 1 bar, you're able to make a perfect scalp, and you're feeling pretty good. Next candle, you're able to scalp out right there. So two-legged pullback to the 20 EMA, bread and butter. That's what we like to do. But notice this, that we do have this cause of concern. But first touch to 20 EMA after strong downtrend, most likely retest the lows here. Let's actually see if we retest those lows. It goes higher and higher, higher. Oh man, look how close it is to my 4-point stop loss. Doesn't actually hit it. And so for some reason, if you didn't scalp out here, you could have scalped out here. You can come in with a scale in to scalp out here, or come in here, scalp out there at the break-even point. But regardless, this is actually a H4 failure too as well. And we come down and yep, look where we found slight support here. We found slight support here, and so the bulls were thinking double bottom, so we saw pullbacks here, but the bear said no, we're stronger than you, and we have essentially at this point have taken over the market. But this pullback hitting a couple legs up, you're thinking maybe this bull trend is starting to weaken now, but you're thinking at least one more test of the lows here. Alright, so that's it for the chart review today. There are probably more setups later, but Really after midday, man, the setups are just hard to come by. It just gets so choppy. So I mean, we can take a look here. Look at this choppiness. Look at this two-legged pullback that pops up way above the 20 MA. Really hard to trade that. Channel here, and actually look at where we come. We come up here, retest there. Our bulls took their profits here. Price target, double top, higher double top, then trend reversal right there. Gets choppy here, just real quick. You just see all this chop. You make a trading range here, you know. But it's hard to trade this, right? Because the only information you have at this point is this, and you know, just this is the only information you have. And by the time it's actually time for a trade, you're looking for a lower high, possibly here, lower high, and yeah, you get your lower high and actually make a point there. So that's another instance of a lower high in the trading range. So yeah, I mean, there are probably a couple more setups, but we'll go over those for now, and hopefully that has been helpful for you guys. Yeah, and as always, happy trading and God bless.